Hello everyone, this is Evan here from the Trade Risk on Friday, January 13th with a weekend market recap video. We're going to cover all of the major markets, current market environment, sector analysis, and then finish off with some of those popular individual names. Reminder, if you guys like these videos, if you watch every week, please do subscribe to our channel in the bottom right-hand corner. Just keeps you up to date with all of the latest videos that we're publishing week to week. So with that, let's get into markets here. S&P 500 SPY ETF finished higher, almost 0.25% on Friday. Let's start with the weekly chart though. Let's take a look at what happened this week. You can see we actually finished slightly lower, basically a flat week. And take a look at the candle that we printed this week. You can see we probed all the way down to below that 225 level and managed to rally back up towards the highs. And you can see now we've consolidated 5 weeks sideways, going nowhere since the beginning of December. So we're putting in that digestion after that strong rally post the election, and you can see we're just hovering at highs, not making any progress, but not doing a whole lot wrong either. So back to the daily time frame, you can see more specifically came into the week here, and it was just a choppy week. There was a lot of whipsaw. We had some intraday fake outs or some intraday sell-offs, which were then strongly recovered. We're still above a rising 8 and 20, so not much else to say about this market. It's simply consolidating. The leadership has sort of really thinned out. If we're seeing maybe biotech lead one day, or technology, which has been strong and mostly leading us higher over this past week or two. Really the new year has kind of been doing it solo. There hasn't been a whole lot of broad participation this year. It's been a lot of sort of individual sectors kind of going at it each and every day. So waiting to see if that shifts, waiting to see how this range resolves. Once again, for a slightly cleaner view, you can look at the cash market. You can see we did try and make an all-time high here on Friday. We had the potential to make an all-time closing high. We couldn't quite do it. You can see with the fade off of the highs. Again, maybe the long weekend has a bit to do with it. Generally, consensus being a 3-day weekend, you don't want to take a ton of risk if you don't have to, just given you have an extra day of sort of unknown out there due to the holiday on Monday. So could be a part of it. Friday session did still close higher across the board in all the major indices, and perhaps we'll look into it when we start looking at the sectors, but the financials, that fade off those highs could be maybe even a little tell, or largely due to the reason why we couldn't close here at new all-time closing highs. So that is the scenario. It's basically trend remains higher, remain consolidating, working off those overbought conditions, and we're basically in wait and see mode. We're playing it the same way. We're looking for individual stocks that are moving in those sectors that are seeing some momentum, a little more than the broad indices. Moderately exposed, still definitely want to have that long exposure, don't want to be all in and waiting to kind of see what next week brings. You get the inauguration and earnings, of course, which should start to impact the market and should start to be a very busy week next week for markets. With that, let's get into the IWM. Russell 2000 had a nice stick save here by the bulls on Thursday. We started to break down through support below this 135 level. Been put out a post earlier in the week saying, bulls are relentlessly defending support until 135 is broken in a meaningful way. That's when I would become concerned. I was concerned intraday on Thursday, but that's why we look at closing prices, and you could see we basically closed above that support, so the bulls saved us, and we managed to march higher on Friday. Again, not near the, it didn't close at the highs, but still a positive session. Still clearly range bound here. A lot of consolidation over the past 5-6 weeks. Waiting to see what's going to happen with that. And then the NASDAQ 100 is the bright spot. They are, again, kind of the solo leadership here over the past, basically for 2017. Closed at new all-time highs, very constructive, very bullish trend, and it's just continuing to sort of chip away here to the upside. So that's the bright spot in the market. We want to see other things kind of follow in the Q's footsteps. So let's take a look at some of the other major markets. TLT. So this one has been rallying. Again, we've talked about this rally here throughout 2017. Nice relief rally after getting crushed in the second, basically the last quarter of 2016. It's hanging out here, closed down on the day. We took a very tactical short here, members and I, on Thursday. So yesterday, we actually shorted TLT via the TMV, which is just a 3x bearish bond fund. And we actually covered everything today definitely closer to the lows, not quite at the exact lows, but here just for a quick one-day flip, like the failure, like this kind of candle here for a quick reversal trade, something we put on. We're no longer in this, just locked in a small gain. So, it's still tough to say. You got basically a good landmark right here, 122.70. That's going to be, basically your momentum area to break above. Weekly, you're going to really see the damage. If you look at this weekly chart, you can see 8 and 20 still sharply lower. On the daily chart, you can see it's trying to just maybe start a consolidation period here in between, 5 or 6 point range. I think that perfectly reasonable, but doesn't look too actionable to me there anymore. USO continues to consolidate here. It saved, again, had a nice save by the bulls on Wednesday. Talked about this being a pretty important day, Wednesday, where kind of got hammered on Tuesday, hammered on Monday and Tuesday, and looking like it could really sort of cascade lower. But Wednesday we saw that nice reversal. That gave us a little encouragement, showed us that maybe we're a little off sides on the sell-off, around $11.10 in the USO ETF. And you can see we did close the week higher, just in the midpoint of this range, kind of just sitting here, not interested in it whatsoever, but I am interested once this eventually sort of resolves itself. I think you got a clear line in the sand here, about 11.75 on the upside. Start to break above that, start to get a lot more bullish. UNG, daily chart doesn't look too great, right? Looks pretty messy. If you go to the weekly chart, may be a little more actionable. Up 4% this week. I mean, it might not be saying much given we were down 12.5 last week, but it did kind of put in this little perhaps meaningful reversal here at the bottom end of this channel, right at that round $8 level, which has been previously significant kind of pivot level, back above the 20 period, or closing right at that 20 period EMA. So perhaps UNG, it will be worth a trade back to the upside here. It did look at it, didn't quite fit the bill exactly how I like to play for reversals, so I passed on it, but something to consider. Maybe we have enough of a reversal action on this pivot day here from Monday to start to bring us higher and maybe fill this gap here in the ETF. We'll have to see. It's a little bit dicey. There's cleaner setups out there, the way I look at things. GLD continues to work higher. Finished Friday up on the day after seeing a sell-off early in the day. 8 and 20 are up, and it did try and fill this gap. It did successfully fill this gap here back from November. So it's doing the work. It's grinding higher, and if you want to try and play in this mini trend, you can. Weekly chart, just remember it's pretty damaged, and this level up here around 115.60 or so, prior support. Call it the breakdown level back from late last year. That might be your next sort of level of interest to pay attention to. And silver, pretty similar situation, not really climbing as high on that kind of structural trend basis, but it is coming back into these December highs, so 1620 or so. Expect that to have a little bit of hesitant sort of trading action there as it comes back into that previous supply. So that's the levels I'd be watching in the metals. With that, let's get into some of the other markets. Sector analysis. XLF, let's talk about that. So we did have a few banks reporting on Friday, and we're off to a strong start at the beginning of the day, but you can see this candle that we printed here. It kind of pushed up above this 23.75 level. This is where it's been failing for the past 2 weeks. Almost about a month and a half or so, and once again did fail there and close off the highs. Finished up 0.5%, but off of the highs. So really the story continues to remain one of consolidation and chop, working off the extreme sort of overbought conditions throughout November and December of 2016, and we're moving sideways for about 5 or 6 weeks now. Clear line in the sand, right? I like when these levels get pretty clear, 23.75, 23.80. You want to be, a lot more constructive, bullish, long, however you want to think about it, above that level. While we're in here, probably, you can have a smaller starter position. All depends on your strategy and time frame, but you want to just be more so patient, waiting to see how this all resolves. This is it's a notable sort of reversal candle here and a failure to kind of hold on to those highs. If we saw a downside follow through immediately next week, that would be concerning. That maybe we do need to come back down here and kind of either take out some stop losses or put in a meaningful retracement. So pay attention to that next week. But for now, you're kind of just sitting in the middle of this range. Not too much too else to say about it. XLK back to the upside, bright side of things. Again, technology been kind of that solo band leading us higher. Closed at new all-time highs today. Continues to look good. Stair-stepping higher. Doesn't have a tremendous amount of momentum behind it, but it's working itself up. XLY also getting back very quickly to these previous highs in kind of a stealth grind sort of rally. So all the way almost back to these December highs here in XLY. Finally, XLI, the industrial ETF, still something that I'm watching to really get some life back in it, get that upside momentum pop that some of these other sectors working. You can see it's bumping up against the 63.25 level. Closed near the highs of the day today. It did break this trend line earlier, actually late last week it did, and now it's kind of just hanging out here. So still not a whole lot of energy behind it. Again, might still need to wait for earnings to start to siphon through before it can get some real momentum in XLI, but something to keep an eye on. Could see a nice rotational kind of momentum move in that next week. Finally, XLE continues to lag here, even though oil is up there kind of stabilizing. You're seeing this sort of drip lower here in a lot of these energy stocks. Well, it's pretty split, but you definitely have, if you start looking under the hood here, you definitely do have some names that are outperforming versus some that are lagging out. But the XLE overall is kind of in this drift lower. It needs to get, reclaim this 20 period EMA and get this 8 period back above it and bullishly aligned. Once that can happen, then you can start to be more constructive here, but still kind of just lagging, no energy, literally behind the energy sector. So that wraps up some of the sector analysis. Let's look at some individual stocks. We'll start with Netflix, which saw a nice breakout today above these recent highs. Posted this chart yesterday or 2 days ago showing this flag right above resistance. I like this pattern. This is one of my favorite patterns when you have this little mini base over a larger kind of breakout base. I like those patterns because the risk to reward is so, you can keep your risk so tight. It's very clearly defined, and generally you can get some nice moves out of it. I opted to sort of drop this off my immediate watch list just because it does have earnings coming up so soon, and I didn't really want to play around in this, but looks great. If it didn't have earnings up, I'd probably be in this today, but I'm going to have to pass. But looks good if you want to scramble in there for a few days. That potentially works. Tesla also continues to move up 3.5%, just nonstop. Every dip down to this 8 period EMA, right when it looks like it could roll over, gets bought, and I guess that's the hallmark of a strong trend. So continues to work higher. Coming back into the midpoint of this range, if we looked at the weekly chart, you can see this area more or less is where we've seen a little bit of struggle in the past. This 240 level, 235, 240. You've seen a lot of chop in here before, so maybe we get some hesitant price action next week up at these levels, but continues to sort of work. Twitter, also one that we've been talking about recently, ended up just slightly on the week. You can see trying to consolidate a little bit here, just having some trouble clearing that 20 period EMA, but it's holding up pretty resilient given how damaged this chart was coming into the year. So it's done some good work. If the bulls can kind of put in a higher low here, if it can hold on to 17 and make a higher low into earnings, maybe get a little squeeze going, could be interesting. So Twitter, keep that on your watch if you're pretty tactical. Alibaba, we also talked about this one, had this strong pop last week, and now it's consolidating that move. If we can get back above 97, basically today's highs, Friday's highs, then you might be able to start to continue to accelerate higher here. But I like it. Ever since snapping this downtrend line, it's kind of been working to the upside. And finally, one we haven't talked about in a while is Priceline. And Priceline, you can see, continues to hover near highs. Admittedly, this is, in my experience, been sort of a difficult one to trade. There's a lot of chop in this. The moves generally aren't the cleanest, although that doesn't have to be the case. Anyhow, progress above today's highs, this week's highs, which we did close at the highs of the week, above 1550 next week. I think gets pretty interesting. You can see it's got this nice little pattern here that it's kind of been consolidating in. If it can start to clear and lift above 1550, then it's a big name, but could start to move very quickly back up to these prior highs up at $1,600. So we'll end it there on Priceline. Thank you guys for watching. Hope you have a great long weekend, and I will talk to you soon.